Radio 1 FM 90.
Brought to you by Housing Finance Bank, a financial institution regulated by Bank of Uganda. Housing Finance Bank, we make it easy.
Your views, our interviews on Spectrum, Radio 1 FM 90.
A very good evening to you, and thank you so much for joining us for this edition of Spectrum, live on Radio 1 FM 90. We're also coming to you live on our website, which is www.radio1fm90.com. We are live on DSTV audio channel 897. We are also live on the different radio listening apps, TuneIn, Afromobile, Your TV channel, Radio Garden, and Stream Afrique, which can be obtained from the Google stores of your smartphone. Today we'll be looking at the tax obligations due in the month of June this year. Well, we know the month of June is very critical when it comes to issues taxation. That's when the tax body, URA, expects you to file your returns for the various taxes covered in the tax laws of Uganda. We have a few days to go until the 30th of June, and there are so many businesses whose calendar year is 30th June, others have December. So the taxman is here to actually talk to you about what you're required to do, your obligation, and your views on the issue of taxation in our country. Generally, the issues, the challenges that you're facing, probably making it hard for you to comply. Let me introduce my guest, Mr. Peter Kwesigwa Mukama. He's a manager under the Domestic Taxes Department of the Uganda Revenue Authority. Good evening, and thank you very much for joining us, Peter.
Good evening, and good evening to the listeners out there. I'm so happy to be back here.
Nice to have you. How are things shaping up at URA?
Things are shaping up fairly. We are closing the financial year very soon, and as part of course, our pledge to our taxpayers to ensure that we continue engaging them and make them know of all their tax obligations. That's why we are here. And I believe our taxpayers are out there listening to us.
All right. I did mention in the introduction that the month of June is very critical. Why is it very critical as far as taxation is concerned?
Now, Kenneth, you know, we run a self-assessment regime. And, well, our taxpayers have been accusing us of using a lot of jargon, a lot of English. But I want to be as plain, as simple as possible in today's program. Now, the self-assessment regime simply means that our taxpayers have the opportunity to assess themselves the tax that they are supposed to pay. Now, usually, we have timelines. Now, our timelines, just like the way you had introduced it, depending on someone's calendar year, someone's year of income, they get to know when they are supposed to file their returns. Now, back to your question, why June is so important. Most of our taxpayers out there, their return of income, their year of income is 30th of June. Now, usually it means that by the time 30th of June comes to an end, your year of income runs from 1st of July to 30th of June, meaning you're going to end the year. Now, what does it mean for you? If the year is ending on 30th of June, what obligations do you have to fulfill? So that's why we are here, to ensure that we make sure that all our taxpayers now who fall in that category know of their tax obligations. Now, back to the self-assessment regime. Usually, our taxpayers don't know that they have the opportunity to determine the tax that they are supposed to pay. Most of them don't know that. But what this basically means, it means that you as our taxpayer, you have the liberty to assess yourself, look at your business transactions, and calculate and see how is it that your business performed, depending on whether we are looking at a period of a monthly period or an annual period. We give you that opportunity to assess yourself and ensure that you give us those records. Now, that's what we mean by a self-assessment regime, even minus someone coming to your business, showing up to assess the tax that you're supposed to pay. So in this month of June, we are here to tell all our taxpayers, especially those whose year of income is ending, is 30th of June, to ensure that by now they should be giving us their final provisional tax. I'm going to explain some of these jargons as we go on, and also those ones whose year of income is 31st of December, by now they should be preparing to give us their final income tax return.
Well, it's self-assessment. So I can sit somewhere and estimate and determine how much I should pay to remit to URA.
Yes.
Can I estimate, or there is a basis there, things to rely on actually to determine that self-assessment?
Okay, now, of course,
facilitate the self-assessment.
Yes, of course. Now, usually when we say yes, it's a self-assessment, we have some basic information that we are going to require from you. Now, of course, you must be familiar with what we call a return. It is one of the jargons that we use, but it's an English word. So a return simply means a self-declaration that you're going to give us for a specific period of time. But this declaration is giving us your business transactions that have happened in a given period of time. Now, these so-called transactions, at the end of the day, they will also help you to reveal the tax payable that you're supposed to pay to URA. So, when you're giving us this return, there are like three things that we look at. One, we're going to look at the period. What period are we looking at? We have some returns or declarations that are supposed to be coming on a monthly basis. For example, we have the VATs, the pay as you earn, the local excise duties, those monthly tax heads. Now, those ones, their periods are monthly. It means every month you must assess yourself. If I take an example of VAT, look at the purchases that you have made in a given month. Also look at the sales that you have made in a given month. Furnish us with that information.
That is if you're VAT registered.
If you're VAT registered. Furnish us with that information. Now,
who is VAT registered?
Usually we look at someone's turnover. Yes. For now, the law requires us that for anyone who is dealing in taxable supplies, whatever you're selling, as long as they are taxable in the VAT context, and your turnover is 150 million and above in a given specific period in a given 12 months period, that is in a year.
So if you've transacted to the amount of 150 million
exactly
in 1 year,
yes, in 1 year you're required by law to be registered for VAT.
If you don't,
then we may have to register you forcefully, because there are also consequences for non-registration.
Okay.
So if you give us back to that now, you give us that declaration in a given month, that is accounting for your VAT. As you're giving us that declaration, the same system that we use, you're going to determine your tax payable. So you see, it is absolutely a self-declaration. It's you telling us. Then we have also the annual taxes. For example, the direct taxes that we shall delve so much into in this program, where we have the income tax and maybe some of the people that derive some income from rental properties. Now here, of course, for you, you're supposed to declare on an annual basis. So for you, your period is a 12 months period, depending on your accounting year or your year of income. We have people who run a calendar year, like mostly schools, from January to December. We also have people who run the normal year of income, like our government, that runs from July to June. So we also look at that period. Now, give us your business transactions that have happened in that 12 months period. Then, of course, we shall be interested in your income, your expenditure, mainly so that we are able to assess how much profit that you made, because like we shall see, tax is on profit. So for us to understand that profit, definitely we shall look at the information that you'll give us. Yes.
All right. There's some key issues we need actually the listener to clearly understand. There's the declaration of income. You've tried to explain that. Yeah. There is periodically made to URA. You've also tried to link that. But sometimes the issue is about how much somebody actually should pay out of the transactions they have actually made. What exactly is a person expected to pay?
Now, when we're looking at this declaration that you're giving us, which we have called a return, I'll take an example of income tax. You've given us your income. How much money did you make in a given 12 months period? So we shall get that income, and definitely we expect you to have some expenses, because you don't just earn minus spending. So we shall also look at the expenses that were incurred directly and specifically in deriving that income. This is very important for people to note. People always complain that some of the expenses we kind of disallow them. So we look at the expenses that you have incurred in generating that income that you have told us. So in simple terms, we are going to look at your income, we less your expenses, then we look at the balance. Now, that balance, it's the one that we are specifically interested in. Is it a profit? Is it a loss? Depending on whether you registered as a non-individual or companies, we shall apply the tax rates on the residue. If you have gotten a profit, then we shall expect you, if it's a company, to pay 30%. If it's an individual, then we shall also apply the relevant tax rates. But important to note here is that when you're giving us this declaration or this return, it is the same way, the same system that still will show you the tax payable, that will reveal the tax payable. So someone is able to sit in their office, Kenneth, and they file their return, and they know how much money that they are supposed to pay, minus even walking into the URA office. Now, that is what we call a return.
All right. We also understand there are people who are required to pay, and sometimes you categorize it as individuals, non-individuals. Can you break that down for people to understand which particular category they're in and the tax obligations that they're supposed to adhere to? Okay.
So looking at the people now who are required to furnish us with these returns, we have persons, of course, who here we are looking at both individuals like me and you. We also look at the non-individuals. In the tax laws, a person can refer to both an individual and also a non-individual. But non-individuals, simply here we are looking at how did you register yourself. Some people go and register as companies, others go and register as trusts, others register as probably partnerships. So all persons who have a chargeable income, they are supposed to give us these returns. Now, when we look at the chargeable income, we have two main incomes that we look at. We have the business income and also the rental income. Now, for business income, I can briefly explain what this means. We look at income that is earned by an individual or a non-individual, but this person is carrying out business. When we say business income, we are mainly interested in the income that you have earned as a result of carrying out a business. Now, I can briefly explain what are these businesses that we look at. For example, we have got people who earn income from trading of stock, disposal and sale of stock. These are, I think, they are the majority that we have in Uganda, especially these people who are into wholesale and retail. You buy things, you have them in your shop, you wait for someone to come and buy them. You bought them at 20,000, you have sold them at 25,000. So there is an element of business. There, we know that you're into business, and you're supposed to furnish us with this return. We also have categories of people who are earning business income as a result of some gains that they get on disposals of assets. This is very important to note. Some people don't know that if I have a business asset and I dispose it off, then I'm supposed to account to URA. I'm supposed to file a return to account whether I have gained any profit or I have incurred a loss. So whoever is in that category, you have a business asset and you have disposed it off. Maybe you are a company and you had your building, and probably maybe you're shifting and you've decided to dispose of your company, to dispose of your building. We shall require you to furnish us with that return so that we ascertain and know whether there was a gain on that disposal of your assets or there was a loss. Then we also have individuals and non-individuals who derive some rental income. Now, these ones are people where you find that probably they are letting out any immovable properties. I'll give you an example of a building, of course at a consideration. You have constructed your building, and people come in, they rent it out, and every month or every quarter or every year, you're deriving some income in form of rentals. So you have an income that you're earning, and definitely you're supposed to furnish us with this return. Then we also have some categories of people. You find you're employed, like you and me, but on the side, you have something else that you're doing for yourself. It can be a business, maybe you're offering some consultancy here and there, or you have constructed your own houses and you're renting them out. So the fact that you're employed, don't think that pay as you earn is enough on your end and you're not required to file. No. You're supposed to now account, and you also show us now this other extra income that you're deriving. Show us how is it that you account for it. Basically, we're also interested in your incomes and expenses so that we see whether you qualify to pay tax or not. Then we also have some directors. You have a company and you went to our registration services bureau, you incorporated, and you're a director in that company. And probably you find you have even more than one companies. So the fact that those companies are into business, if they are into business, we expect you to also account whatever that you're getting from those companies. Because we understand, yes, some directors may be employed in those companies, or some directors may be shareholders, and they are deriving what probably would call dividends at the end of the year. So we would expect you to also furnish us with these returns when the year ends. So those are the categories of people that I have talked about. And I believe people have gotten and have understood. Because people always ask us these questions. I have a company, but they are telling me to file as a director. So it's very important for you to also note that by you being a director, we are also interested in seeing how much is it that you're deriving from this company.
That's too much taxation. You know, when you sit down there and you think about the way taxes are actually levied, you would say you're targeting very few people with almost the same iron fist, one would say. You know, the company is paying, the director is paying.
But when you to look at it in the context of, because we had not yet now reached the part of paying. Now we are still asking you to give us a return. We simply want you to give us an accountability. We want to get information. What is it that this company is doing, and what is it that you, as the director, is doing? Are you employed in this company, or you're a mere shareholder? But of course, eventually, we're also interested in seeing if there is any income that you're deriving from these companies.
All right.
Yes.
So we now have business income. We have rental. We have a number of avenues for you actually to tax. Let's go through those. Business income. What are you looking at?
Business income, Kenneth, like I had briefly highlighted. I can just briefly highlight it again. We have people who are into business, trading of stock. They have maybe they are into retail, wholesale. They sell and purchase stock. Then I also highlighted about in videos you find you have disposed an asset. It can be either a business asset, or probably you have an asset that you are using in the business and you have disposed it off. Then definitely we shall also be interested in seeing what are those proceeds. Have you gained anything, or you lost? So what we normally call gain or loss on disposal. But it's also important to talk about the people that we exempt from filing these returns. You know, I've delved so much on who are these people that are supposed to give us these declarations. Of course, I had also highlighted the people that are deriving some rental income. You're also supposed to give us some rental returns. But we have a category of some of these people that we exempt from furnishing us with returns. And one of them, we've gotten employees. I had talked about someone who is employed, but they have other sources of income. Those ones are supposed to give us a return. But if you find that you're an employee and your sole source of income is only deducted at source, that is through pay as you earn. then for you, the obligation of filing a return does not lie with you. It instead lies with your employer. So you may be exempted from filing a return. However, I would encourage you to go ahead and register for a TIN. Go to URA, get a TIN, ensure that you give that TIN to your employer so that whenever they deduct any payers you earn from you, that money is tagged on you as the taxpayer. You know, it's very important to work in URA and someone also shows you that these are the taxes that you have paid this year. So it's that can only be possible if you register with us, with URA, and whenever your employer is filing the returns, make sure that they are declaring that payee. They are declaring your TIN. Then we also have another category of people that we don't require returns from, and usually these are non-residents whose income has been subjected to withholding tax as a final tax. Now, Kenneth, withholding tax, this is tax that we deduct at source. Before someone pays you, they deduct on behalf of government, on behalf of URA, and they submit that money to URA. So we have some categories of people, especially those who come in. I'll give an example of musicians. If a musician comes in and their role is to just come, perform, and after they go back, we may not require return from them because whoever has brought them in this case, usually the promoter, is going to deduct money from them and they are going to give it into URA. So when withholding tax is deducted from you as a final tax, this is very important. You're not required to file returns. However, we have a specific category of people that pay where withholding tax is deducted from, but we require them to file returns. I'll give an example. These are the majority. You find you've gotten a tender to supply probably some things to Radio 1, and before Radio 1 pays you, they deduct 6%, and they have paid you the residue, the balance. Now, that 6% is not a final tax. The 6% that they have deducted from you, yes, it is a tax credit. But at the end of the year, we expect you now to file a return and you account for the income that you got. So what we shall do, basically, we shall look at how much did Radio 1 pay you. We look at that. Definitely, we less a few expenses that you incurred. Now we look at the residue, the balance. If you have incurred a profit, and we attach our tax rates and we find that you're supposed to pay tax, then we shall go now and net off the withholding tax that they had deducted from you. So for those categories of people where withholding tax is deducted as a result of probably you have supplied, usually the rate is 6%, or you have done a service, a professional service, and before they pay you, they have deducted. For you, you're required to file a return. So those are the few categories of people that are exempted from filing these returns.
Right, Spectrum on Radio 1 FM 90. My guest this evening, Mr. Peter Kwesigwa Mukama, manager under the Domestic Tax Department of the Uganda Revenue Authority. Our discussion is around your tax obligations. As the month of June comes to an end, you are required to file your returns. You are also required to prepare and pay the due tax. We are going to go for a break, but keep your comments coming via the WhatsApp line 0703 090, and Peter, he's here in studio to respond to your questions but also the comments. Now stay tuned, Radio 1 FM 90. We continue after this break.
Spectrum on Radio 1 FM 90. Spectrum on Radio 1 FM 90.
It's a pleasure to have you still tuned to Radio 1 FM 90. This is Spectrum on Radio 1 FM 90, and we're looking at tax obligations due to you, the taxpayer, as the month of June comes to an end. My guest this evening is Mr. Peter Kwesigwa Mukama. He's the manager under the Domestic Taxes Department at the Uganda Revenue Authority. We do value your feedback, so please send us that question or comment via the WhatsApp line 0703 090 090. Peter will be here to respond to your comments. So, Peter, we've been skirting around the issue of the obligations. So now I wanted to go clearly to the taxpayer. What obligations they have now that June is coming to an end?
Thank you so much. Now, the number one obligation is to ensure that you file your income tax returns by the 30th of June. Now, I want to categorically categorize the people that are supposed to furnish us with a return and those that are also supposed to pay. Now, we have two kinds of returns. We have what we call a provisional return and a final return. A provisional return, in simple terms, it relates to an estimate. This estimate, we expect you to give it to us when the year has started. Now, we have got some taxpayers with a year of income that ends on 31st of December. Now, usually, these ones, their year of income starts from 1st of January to 31st of December. Now, the law requires that you submit your first provisional installment if you're a non-individual or a company within 6 months. And if you're to count from January to June, those are the 6 months. So that means if you fall in the category whereby your year of income ends on 31st of December, you have very few days to have filed and paid and given us your provisional return. Now, usually, when we're administering this provisional tax, we encourage people, especially for people who are non-individuals, we give you an opportunity to pay your income tax in 2 installments. So that means every 6 months we expect a payment. Every 6 months we expect a payment. By the time the year ends, you have already paid your taxes.
So when I pay an installment now, I should be able to top up with the same installment at the end of the year.
Exactly.
What if I didn't make the amount of money I actually estimated in the provisionary return?
Now, that's why I was coming. Now, I explained, yes, we call it a provisional return because it is provisional. It's an estimate. We expect anything can happen. It may increase or business may not work out like you had planned and things may go bad. So we still give you a liberty to amend this provisional return within the year. So that means, that's why we encourage you to ensure that you take advantage of this law and ensure that within 6 months, if you're an individual, you've given us that provisional tax. And if things don't go well, you can go back and amend and you reflect the actual picture. Now, if you are an individual like me and you have gotten some rentals probably here and there, or you have a business that you're running, and also your year of income ends on the 31st of December, by now we also expect we expect you to have given us the first provisional, which should have come by 31st of March, and now we expect the second provisional. Because for individuals, we give them 4 installments to pay their taxes.
All right.
So that means if your accounting date is 31st of December, for you by 30th of June, at least you must have visited URA, either our URA portals or in the URA office in case you have challenges, and ensure that your provisional tax is filed and paid. Then we have what we call a final income tax return. Now, a final income tax return usually comes at the end of the year. Now, this means now we are looking at the actuals. We are going to look at how did the business perform, of course, in comparison with what you had given us as your provisional tax. So we have gotten taxpayers, of course, also with a substituted year of income, the year of income that I was talking about that ends on 31st of December. Now, for you, it means that your year ended on the 31st of December 2023. That is the year of 2023 that ran from January to December. So by 30th of June 2024, that is the day that is coming within few days, you must have given us your final income tax return to tell us how 2023 moved. Either you made a loss or you made a profit. Now, once we get that, definitely we compare with the provision that you had given us, and we look at how things have finally turned up. So people should not fear to give us an estimate. They shouldn't, because after all, we allow you to amend this return during the year. As time goes on, you're supposed to keep on checking yourself. How is my business performing? If things are doing well, amend and increase on the amounts. If things are not doing well, probably we also give you the opportunity to amend and you reduce. Then at the end of the year, we shall expect you now to give us the final income tax return. Then we also have some people, of course, now they had given us a provisional, but things have changed. Things have changed. Either they have increased or they have reduced in terms of their turnover, in terms of their incomes. Now, this is an opportunity for you to come and amend this provisional tax, because like I will explain, once the financial year ends, we may not give you the opportunity to amend this provisional tax. Now, this specifically relates to those whose year of income ends on the 31st of December. Then definitely we expect you to pay all the tax outstanding by 30th of June 2024. So if you have any outstanding tax, probably from areas or for normal the people that give us their normal returns, the monthly returns, the VAT, and you have any outstanding areas, we also encourage you to come and pay before the 30th of June, because one, our interest is computed on a daily. So if you don't pay, definitely you're going to find yourself paying more interest. So those are the obligations that we expect our taxpayers out there, especially in the month of June. Ensure that whether you're an individual or you're a non-individual, I always encourage people out there. These days, we have tried to spread across town. I don't know whether you're aware that we even have an office in Chikubo. Yes, we do. Now,
under pressure.
It may be under pressure, but we listened to our taxpayers. They cried out that they needed at least help. So we were able to put up a structure. It's a temporary structure, yes, but for now we are able to serve our taxpayers in Chikubo. If you find that these things of computer, these jargons are so hard for you, please don't feel shy. Walk into any of the nearest URA offices, and I'm very sure you're going to find someone who will help you out.
All right, let's continue. So I'm a person out there, or maybe I have a company, I'm willing to pay, maybe I'm registering a company. What are the requirements for filing these returns? We should let people know what they need to have before they even think about filing their returns.
Now, we have been undergoing a transition at URA. And of course, whatever we bring on board is to ensure that we make the life easier for our taxpayers. And one of the things that we're using is internet. So, one, you must ensure that you have internet for you to give us this return. And of course, you must have registered with us. So, you must be having a TIN. You have a TIN. What we do once we approve a TIN, we also give you what we call a password. That password is unique, and I always encourage people to ensure that they safeguard it. Don't let anyone access that password. So you use the same TIN and the password, log in that account of URA to give us that return. Now, the other things are the basic things that, of course, that you require. You require a computer. You require some basic business records, because whatever you're going to give us is information. Now, in most times when you give us this information, we always follow up. We want to verify. And of course, Kenneth, here people were I saw some of the traders that were against IFRIS. But some of these things we may not even follow up with records when you're on IFRIS, because we already have some of this information. So for now, if you're not a VAT registered person, ensure that you keep some basic records. You've purchased something, please keep it on the side. You have sold something, write somewhere. Either get an exercise book or something, and you keep the basic records. For people who are on VAT, we encourage you, ensure that whatever you do goes through our system. Because at the end of the day, when you give us that return, we're not going to ask you to give us all the books that probably you have given us the information. No, we may have to rely on the information that you've given us because you already have all your transactions with us. Then for employers who fall in the other category of pay as you earn, for now, we emphasize that before you give us that return, the normal monthly pay as you earn return, all your employees should be registered with URA, and they should be having what we call a TIN, or a tax identification number. And the rationale is simple. We want a sense of accountability. If you have withheld someone's money, then you need to pay to URA. And when you're paying that, when you're giving us that return, you're going to tag the TIN against the name of this person. Now, at any one point, that employee can log in their own account and generate their own payee certificate. We call it a tax certificate, tax credit certificate. And this usually shows how much income that a specific employee has earned and how much tax has been charged against that income. So everyone is able now to know, yes, what is my contribution on the national cake. Then when you're filing this return, of course, we use the online platforms, and our website is www.ura.go.ug. So definitely we shall expect you to log on onto our website and you furnish us with this return. Now we have some categories of taxpayers that are small in nature, and we call them presumptive taxpayers. And usually these are people that we categorized, and you find that their turnover, or what you can call sales, they range between 10 million and 150 million in a year. Their turnover, sales, not profit, their sales. You find that for you, in a year, the things that you have sold, the money you have gotten is between 10 million and 150 million. For you, we categorize you as a presumptive taxpayer. Now, for you, we have simplified your return. We may not require you to give us your income statement, your balance sheet. No. For you, once you register a payment registration slip, which commonly referred to as a PRN, and you get that payment registration number, we shall use the same receipt and acknowledge it as a return. So for you, you are exempted from these things that I'm talking about of give us your income statement, profit. No. For you, we shall look at your turnover. Where do you fall? Do you fall with between 10 million and 150 million? Yes. So you're a small business taxpayer or a presumptive taxpayer. Go ahead, register your payment slip. We shall take that as a return. And I think this is very, very important for our taxpayers out there who may find it very, very difficult to access the online platforms.
All right. Most of the explanations you've given, including filing returns, etc., largely rotates around keeping records.
Yeah.
Most businesses don't actually have that culture of keeping records. People transact, money comes in, they put it in their pocket, they spend it. Sometimes they're buying things that even do not have receipts. Maybe they're negotiating for a lower rate and they are not expected, and they are not picking receipts or things like that. Don't you think this is one of the huge challenges that you will be facing as URA to actually assess individuals, and even URA will be having to assess the right taxes that somebody should pay?
Let me give you a practical example. You see, when we brought IFRIS on board, it was brought as a solution to some of those challenges, because we know our taxpayers may find it very difficult to keep a record of maybe 2 years ago. I'll give you an example of a tenant. You find that someone owns a shop, maybe in one of these arcades, and the landlord, of course, is charging him rent. Now, when they pay, the landlord gives him a sheet that is just written on either paid or rent cleared. Remember, they have not even stated the amount that this person has paid. Now, when we are to calculate this person's business income and arrive at the chargeable income that we are supposed to attach our rate, it is going to be very difficult, because by the time we arrive at the taxable income, we look at your income with less expenses, and some of the expenses definitely is the rent that you paid. So we shall ask you, kindly give us the rental receipt for us to prove that indeed you paid 2 million or 4 million that you have claimed. Now, the biggest challenge that we have faced in town, some of our taxpayers, they do not have these rental receipts, and they have found themselves in a situation whereby it is hard for also URA to determine how much money indeed they incurred as an expense, especially for rent. So when we brought IFRIS on board, this is what we want to address, because take an example, this landlord, if he's registered for VAT, like most of our landlords that we have in town, you give him your rent, you've given him 2 million, then he definitely has to give you an IFRIS invoice that is equivalent to the amount that you've paid him, which is the 2 million. Now that means at the end of the year, when you're giving us your income tax return, you as the trader, you're going to get your income, then you less the expenses that you've incurred. Part of the expenses, of course, is rent that you paid. Now, we already have this information because the landlord gave you an IFRIS invoice. So we shall not even disturb you on to ask that you give us proof that you indeed paid the 2 million. So I would request our traders out there to embrace the business solution of IFRIS, because it has come to solve some of these challenges that we've had with business records. Because one of the advantages or the importances of keeping records is to ensure that whatever deductible expenses that you claim for are granted to you without any queries. Because if you don't have any evidence, it will be hard for the taxman to know that indeed it is true you incurred this expenditure. Because the fact that it's a self-assessment regime, we have people who abuse it, who want to lie, and they want to overstate expenses, especially, and maybe understate income, so that they can find themselves in the tax loss position. So we that's why we insist on business records, so that we are able to track some of these expenses and tag them on exact amount that was incurred in deriving that income. So business records are very, very important.
Okay. All right. Now, we need to get feedback from the listener. And then a couple of things have actually come in. Somebody is asking about errors to avoid as you file your return. You'll be able to respond to that. Henry writes in and says, as I'm a faithful taxpayer, how can I get my tax statement for all the tax lines I subscribe, just like I get my bank statement every month? People have been actually asking for the tax clearance certificates. I think this is kind of information that will be important for the taxpayer. Okelo Patrick Bonyo from Busega. If someone gives me a piece of land and I sell it, is there capital gain here to pay? What's the thing government wants to tax? The gift given to me. It's a gift, why tax it? Since you withhold tax at source, do I need to file a tax return as a director of a company? Can a tax body merge these various taxes, pay this, pay that? They seem to be quite many. That's a comment from Bonyo, listening in from Busega. Then we have another one from Martin. Upon registration of a company with URSP, what is the sequence to tax compliance? We have another one. My question to the taxman. Last year we saw a rental tax regime for non-individuals, 30% or 50% of the rental income of a year of income. Has that rate been maintained or changed? That is Kamogo Fred Keta, listening in from Kira Municipality. Thank you for the program, Anderson. My question relates to peasant-based cooperatives deep in villages. URA picks a list from the ministry and then levy taxes. Surely isn't this a way of giving them a second death? That's a comment from Pat. Then we have another comment from Kamogo, who returns. He's from Kira Municipality. Says the other issue is why is it that when we file a provisional return and you have a tax credit, URA still issues you with PRNs and immediately start demanding and harassing without considering withholding tax credits? Why do they have to do that? That's a comment from Chira municipality there. Very quickly, if you can run through those comments, Peter.
Now they are quite many, but maybe let me begin with that one. Now you file a provisional return, but probably you had some tax credits. Now usually the tax credits that you get, we also for now we have simplified our tax statement, which we can call we previously used to call it the ledger. So I would encourage anyone to access it, because if you're in a position that probably you demand URA, maybe your tax credits are more, and then more than your liability, then I don't think we shall insist on you paying, unless those tax credits are not justifiable, because we have some tax credits that are not justifiable. Someone has a tax credit, but they did not give us a corresponding return. There we may ask you to first give us that return, so that we can see how best we can verify those credits. Then someone also hinted on one of the new amendments that are on board, and they're talking about the gifts that they receive from the employers. Yeah, these are part of the new amendments that are on board, and VAT amendments, and it's basically looking at the VAT registered employers, and we're asking them to account for VAT on any taxable supplies that are gifts or donations to an employee. And of course the rationale here is to prevent any revenue leakages. And previously what would happen, you find when you go and purchase Radio 1, maybe now it's Christmas and they're going to give you gift hampers and everything, they have gone and purchased some items for their employees. As they are purchasing, of course they are going to claim some input VAT. But now for them they are giving as gifts to their employees, and they have not paid anything, you see. So there's a revenue leakage there. So we are simply asking now for the employer. We are simply asking him now to account for VAT, so long as whatever they have given their employees is a taxable supply. And of course for us we shall treat it as if it was offered at a consideration that is equal to a fair market value of that supply. So I believe I have tried to explain it. So we look at, if you've received a gift, what is the market value of this gift in the market? If it is a Christmas hamper full of cooking oil, full of what, we can value it. So we shall ask your employer. Yes, we shall value it, and we shall ask your employer to account for that VAT. It may not be you to pay it, depending on the arrangement that you have with your employer. The tax rates, one of the things that came out clearly in the recent budget, we have changed a few tax rates, but especially in the areas of excise duty, there are some things that have also changed on imports, some import duty, but for tax rates on rental income, we have not changed any tax rates on rental income. If you're a non-individual and you're deriving any income from rental, then we shall tax you normally like we were doing at a rate of 30%. If you're an individual, then definitely we allow you a threshold of 2.82, and the balance we shall tax you at 12%. So for now, we have not amended the rates on rental.
All right.
Yes.
Well, we have one final comment here. Taxation. Somebody says, thanks, Kenneth, for the program. As a final consumer, I regularly pay heavy taxes. As VAT, though, one, high medical bills in private hospitals, since I cannot find good services in government hospitals. Two, buy car spare parts and repairs for my car because it breaks down due to poor roads. Three, pay school fees for my children in very expensive private schools. Sending mobile money, every transaction on my bank accounts. When I buy consumables from shops, my question to your guest, why then should I pay income tax?
Now, definitely VAT is a consumption tax, and it is an indirect tax. Now, income tax is a direct tax that is specifically tagged on your income. That is the difference. For VAT, it is a multi-stage tax. This is, people didn't understand this VAT concept properly. But I know with time we shall keep on emphasizing the fact.
You need to come back here one time.
Yes,
and
I need to come back here and explain. But briefly,
because we are told it's a consumer's tax.
Yeah, but briefly, VAT, the way it operates, what it would mean, it would mean that if people wanted VAT the way it should be, the way it is, if the people wanted it, maybe we bring it out. It would mean that URA would employ each and every person on each and every shop in Uganda to ensure that whatever you buy as you're moving out, the officer says, okay, give me 18% on what you bought, which is not practical.
All right. Unfortunately, time is not Peter. Until next time, we'll meet again as you continue sensitizing the taxpayers out there on their obligations going forward. Up next, we have the news in English from our newsroom. Thereafter, we'll have the Soul Train with BB Jr. But from me and Peter, it's a good night.